Hi, everyone, and welcome to the Wirex Crypto Podcast. I'm your host, Lianna, and I'm very happy to introduce our guest for today, Cuy Sheffield, Head of Crypto at Visa. Welcome, Cuy.
Great to be here. Thanks for having me.
Today, we're celebrating the recent expansion of Wirex's partnership with Visa, and we're excited to explore Visa's perspective on the evolution of crypto and traditional finance, as well as the adoption of crypto payments by consumers. So, Cuy, perhaps we could start with how you got into crypto, and let's just start with that.
Sure. So, I actually came to Visa in 2015 through the acquisition of a startup called TrialPay. TrialPay was my first job out of college. It was an exciting company in the mobile advertising space. So I didn't know anything about Visa when I came to Visa, and I woke up one day and the company said we're being acquired, and said, okay, let's go check out what Visa is like. And as I got inside of Visa, I think there were really two things that happened in parallel. One was I started to learn about the history of Visa and the founder, Dee Hock, who I think is one of the most visionary, amazing founders that is completely underrated, not as known as he should be. And started to learn about the early days of Visa and the many parallels of how that compared to crypto. And I was going down the crypto rabbit hole with some friends in San Francisco, and so I had this really interesting experience where I'd spend time focused on payments and loyalty and understanding Visa and the history of Visa during the day, and then I would be going to crypto meetups in San Francisco at night, and I found that this was this fascinating intersection where there were a lot of people who understood payments in the traditional payments landscape, but crypto was new and weird, and they didn't really understand how it would fit in. And then there were people who seemingly knew everything about crypto, but they didn't really know anything about payments. And so I said, this is an intersection that I want to focus on for the next decade of my career. And I felt like Visa had this unique DNA and heritage. And if you read a lot of the early things that Dee Hock said when he founded Visa all the way back in the 60s, it really sounded like he was talking about crypto. And I thought that Visa's got this incredible brand, this incredible network and reach, and there's really such a major role that it could play within this industry. And so I was really inspired by the history of Visa, by the excitement of the new technology and innovation in crypto, and decided I can't imagine doing anything other than really working at the intersection of the two.
I mean, you've really got me going now, and now I feel like doing my little research on Visa as well, on the history. Coming from the intersection of crypto and traditional payment systems, I mean, what do you think are the biggest challenges and opportunities in merging crypto and traditional finance?
Yes, I think we go back to when I really first started working on the space. I think the first challenge was you had people use the term cryptocurrency, and that's really what crypto was about. It was really starting with Bitcoin. And I think that there were two challenges with Bitcoin back in 2017, 2018. It was one, Bitcoin itself, the Bitcoin blockchain, it didn't really scale. You'd hear these stats about, okay, Bitcoin can do 5 transactions per second. Visa can do over 65,000. And then you had the fact that Bitcoin and cryptocurrencies, crypto assets, can be volatile. And so we thought that was a real challenge, that getting consumers to be willing to hold an asset and spend it like a currency with the volatility that Bitcoin had. And so I think in the early days, this idea of crypto payments, it was really more of a niche thing, that you had enthusiasts who were excited about Bitcoin and cryptocurrency, and it's kind of a novelty to spend your Bitcoin and buy some pizza, but it wasn't really practical, and it wasn't something that was really competitive with a lot of the modern traditional payment systems and products. I think what we've seen over time is there's been evolution in both of those categories. I think first on the technology side, we've seen significant innovation and improvement around blockchain scalability and many different approaches in a competitive ecosystem, experimenting with, layer twos on top of blockchains like Ethereum, alternative, layer ones like Solana. And we've just been really encouraged with, all of the developer talent and how quickly, open source technology can evolve, to where, a few years ago, I think our perspective was they'll probably figure it out. There's smart enough developers in the space that blockchains will be able to scale, but we didn't really know that for sure yet. I think now, sitting here in 2024, it's pretty clear that blockchains are scaling, and so I don't think that there's any ability to say here's exactly the right approach. There are definitely trade-offs, but I think blockchains themselves are becoming much more useful as they can scale to support many more transactions per second and lower fees to process those transactions. And I think the second category is really evolving from just native crypto assets that are unpegged and that can be volatile towards the concept of stablecoins. And so we started to see stablecoins emerge in 2017, 2018, coming out of crypto exchanges, very much focused as a tool for crypto traders. But we've seen kind of more and more maturation of the space, and looking at products like USDC, like what Paxos has done. There are a number of regulated stablecoins that you could now be able to represent a dollar on a blockchain. And so I think when we combine those two things together, when you can represent fiat and be able to transact in dollars or local currencies, and you can do so over a blockchain that can scale, that can be fast and that can be cheap, that starts to look like a payment technology. And we think that's what really opens up a lot of the opportunity for developers and fintechs and wallets and companies like Wirex to be able to build new products that consumers can really use to spend against the balance of an asset on chain, but to do so in a kind of a modern payment product rather than some of the challenges in the early days.
I think we've definitely come a long way, right? But in some sense, we're still early as well, right? And maybe let's get into the partnership between Wirex Pay and Visa that's leading the revolution in the way we manage money. Could you maybe tell us a little bit more about the partnership from your perspective, from your side of the table, as it were? I'd just be really curious to hear your thoughts about the partnership.
Yeah, so I think what's really unique about Wirex, and one of the things that I'm really excited about is Wirex has been a long time partner with Visa, and they've really been there from the beginning of crypto linked cards, and they've kind of seen this evolution through a number of different generations. And there's a great blog post I saw that you all put out a while ago on kind of the three generations of crypto cards, and how it really started with having a reloadable prepaid card that you would take an action to sell a crypto asset. You would have some Bitcoin, you could sell it into fiat, you could load that card in fiat, and then you can go and spend with that card. And so those were some of the first products that we ever ended up having in market together with partners like Wirex many years ago. And then we started to see this evolution towards kind of a next generation where you could have the card connected directly to a wallet, and you could create a consumer experience where you're choosing which asset you want to spend from, you're spending from a balance of it, and it's auto converted in real time. So you don't have to take that extra step. You don't have to think about, okay, like let me manually sell to then load the card and then let me go and use the card. It was just, I could use this card as everyday spend. It's linked to a wallet that I have. It auto converts whatever asset I want to spend against. And so that was kind of the second generation. And then now heading into this third generation, and with the recent partnership that we announced, this opportunity to create self-custodial linked cards, which I think is a huge opportunity, And it really enables the capability that I think we're seeing more and more consumers that are coming into the space. They're using many different self-custodial wallets, and they're actually directly interacting with blockchains. They might be using a blockchain within a for a DeFi protocol. They might be purchasing an NFT. They're getting more and more comfortable directly interacting on chain, and they're using a wallet that they can control, that they can manage the keys for. So I think it's both self-custodial wallets. They have more utility. There are more things that you can do with them, and then they also give consumers more control and more flexibility, where the consumer can manage the key themselves. Now, the challenge is that they've traditionally been in this very parallel ecosystem where you could do everything with a self-custodial wallet on chain. But if you want to get back into the real world, well, you're out of luck. You kind of usually have to send funds from your self-custodial wallet off chain to a centralized exchange, wait for that transaction to hit, then convert on a centralized exchange. And we think that this concept of being able to link a Visa card directly to a self-custodial wallet and being able to spend from that balance while you have control of the funds up until the transaction is really, really cool. And so being able to support Wirex Pay and the future vision that you all have of a Wirex Pay ecosystem where you could have a self-custodial linked card is something that we see a lot of opportunity, and we're excited to see how the partnership evolves into the future.
What are some key factors that's really driving consumer adoption of crypto payments, do you think? I mean, I always say this, right? We're still building the plane while flying it, right? So what do you think are those, touch points that are just driving more user adoption?
So I think it depends on the market and the use case. I think one thing that we've seen particularly is when you have stable coins that can run across fast and low cost blockchains, they start to become pretty interesting and useful for things like cross-border payments. And so looking at categories like remittances. If I have a stable coin in my wallet in the United States, and I need to send some money to you in Singapore, I can just send that money on chain in dollars in the form of a stable coin, and you get it nearly instantly, and sometimes for cents or a fraction of a cent, depending upon which blockchain it goes over. So we're seeing this kind of early ecosystem where I think it initially started where the reason that consumers would come into the space would be primarily, to trade crypto. That was really the first use case. It'd be to buy Bitcoin. And we've seen, a number of really successful businesses and products that have been built that have really focused on trading. And then, historically, if you came in to trade crypto, you got a wallet, you got an exchange, then you might discover stablecoins. And you might say, okay, I use stablecoins to move money between my different wallets or between my different exchanges. And I want to be able to make a remittance or a cross-border payment to a friend that also happens to trade crypto. And so we're just going to use stablecoins because we both know how to use them, and they're low cost and easy to use. And so I think we've started to see kind of early signs of payment flows like cross-border remittances happening in stablecoins over blockchains. But they've generally tended to be from consumers who came into the space to trade crypto first, and from products that were, really optimized for trading crypto. That it was, looking at an order book and withdrawing from that exchange in order to pay a cross-border remittance. I think that the opportunity and really the next stage is to have, more purpose-built products for payments. And so if you want to onboard mainstream consumers into the space, to be able to have wallets, to have purpose-built layer 2s or payment-focused layer 1 blockchains, and experiences that don't require you to know or care anything about crypto trading, but enable you to onboard into a product to be able to hold a balance of a stablecoin and be able to send that, on chain without having to know anything about crypto. And so I think we're just starting to see the first products, like that, that are, truly kind of crypto payment products or stablecoin payment products rather than just general purpose trading products that happen to be used for payments. And so I think as we see more products like that, there will be this opportunity to onboard, another class of consumer that is more interested in payments than they are in just trading these assets, and I think that's the next step for the industry.
Yeah, and I feel like the world is shifting, right? And what do you think needs to happen for crypto payments to be as common as using a credit card or cash?
Yeah, so I think first, like when we look at crypto payments, we think there are a number of different use cases and payment flows. And so as I mentioned, like remittances is one, and that's probably one of the earliest ones, from a consumer perspective. Business to consumer disbursements, that's another one. If you think about, gig economy workers, if you think about freelancers, small sellers, think about creators, there are these payment use cases that are, pretty tricky, where you have global companies that want to disperse funds to consumers across 100 countries or consumers that might be in an emerging market. And so I think that's kind of another use case we're seeing more and more interest in early experimentation in. And I guess I always feel like the first step is more likely to be either consumers are using these products for P2P and remittances and cross-border, or they're receiving funds into these products through disbursements. Now, once they have a balance in a wallet, then they're going to want to go spend it. And then you have to have, the really easy, seamless off-ramps, to be able to take a balance of a stablecoin or an asset in a wallet and be able to bring that back, into the real world. And so I think that's one of the major areas that, if you want to see crypto payments, really, really scale into the next level, you need to have ways that consumers are getting paid or receiving crypto or stablecoins, and that, becomes an on-ramp. And then you need to have really good products that enable them to spend from the balance that they have in their wallet. And I think that we'll see greater and greater fiat connectivity on either side of that. For example, even on the disbursement side of, if you're a large global company and you want to disperse and pay out in stablecoins to small sellers or freelancers across the world. It used to be if you wanted to do that, well, good luck. You got to hire a crypto team. You got to go and partner with some crypto startups. You got to onboard crypto infrastructure. You got to figure out how to manage private keys and what to do about gas payments. And it was just really hard and cumbersome to do. Where many of these large organizations, they already have pretty efficient partnerships and infrastructure to use existing payment rails. I think what we're seeing is now there are a number of payment companies. Look at Stripe as an example, that are enabling their customers to do cross-border payouts using stablecoins within the same integration that those merchants and companies have to Stripe already. And so I think it'll get much easier for non-crypto businesses to be able to access these rails, to be able to enable payouts. I think payouts and receiving stablecoins or receiving these assets on chain is one of the best ways that adoption could really accelerate, because now someone has money that they've received cross-border in real time. They want to be able to spend it, and then being able to offer those off-ramp products to spend it, and having really seamless experiences for a consumer to walk in and tap to pay with a card that pulls from a balance that they have in a stablecoin on a wallet. And so I think you kind of have to have both the inflows of people that are receiving the funds, and then the great experiences that enable them to spend the funds in their everyday life.
Yeah, it just there's so many different steps and so many different ways of doing things, right? And looking at the wider financial ecosystem, how do you think Visa is working to bridge the gap between traditional payment methods and crypto payments?
Yeah, so I think becoming this bridge has really been a primary mission that we've had for the last 5 years since we've been very active in the space. And we've really started this to say, there are companies in the crypto industry, who are effectively merchants, on our network. They need to work, now they work with merchant acquirers, but they need to accept cards. They want to be able to use existing Visa payment products as on-ramps to enable consumers to load a wallet or purchase these assets. And there's actually a lot of work to do to make sure that functions well. And so we spend a lot of time on kind of ecosystem rules and ensuring that transactions are coded appropriately, so issuers understand what consumers are buying and how they're buying it. Bringing down fraud, making sure that best in class fraud tools are being used by merchants and acquirers. And so there's a lot of work just saying how do you use a Visa debit card to be able to on-ramp into a wallet in as seamless of a way as possible. And so that was the first place that we started to say, okay, there's a role that Visa can play, and in any place where it is legal, and with all of the high standard of compliance and that we have across our network, how do we facilitate consumers using Visa products to be able to load a wallet or be able to buy a crypto asset with a merchant in our ecosystem? And then the second side has been the off-ramp of how do we enable crypto wallets and crypto platforms to be able to issue cards connected to those wallets and really create products that can appeal to mainstream consumers and make it as easy as possible to spend from that balance. And so Wirex was, again, one of the original first partners that we've had, and we've been really excited to see them evolve over the years. And as we've started to work with more and more crypto partners on the issuance side, we've also been really focused on just how can Visa extend our capabilities and make it easier for those providers to operate those cards. And so, for example, we've been piloting some new features like settlement in stablecoins like USDC, where we have a handful of issuers and acquirers on our network today that are preferring to settle with Visa, sending us a stablecoin over a blockchain instead of a traditional bank wire to a bank account. And so we're trying to bring these capabilities to market and make it as convenient as possible for this new class of companies that are coming to us looking to issue, looking to bring card products to market, and make them be able to operate those card programs, to expand those programs to new markets, and to utilize new constructs like self-custodial linked cards, which we think is a huge opportunity. And so really just saying Visa is a global payment network. We've got an incredible amount of reach. There's a new class of companies. There are new rails. There are new assets that we need to figure out how we can enable a consumer to spend from a balance of a stablecoin at a merchant, an acquirer that doesn't even know what a blockchain is. And you shouldn't have to have both sides of the ecosystem on board at the same time. You should be able to let consumers, let wallet developers be able to build on the technology that they want while still being able to interact with the broader financial ecosystem.
Yeah, it feels like it's definitely an exciting time to be alive, right? With the opportunity to bear witness to these changes in how we connect, how we transact, and manage our money. How do you see the relationship between traditional finance and cryptocurrencies evolve in the near future?
Yeah, it's a great question. I think it's one thing I've found being in the industry for a number of years now is it's just extremely hard to predict. Like this industry moves incredibly quickly. I think as a broad trend, several years ago, I think that most of the interest and activity in crypto was really driven by crypto companies, and companies that really, as I mentioned, started focused on crypto trading. And so even any like stablecoin payments or crypto payments, it was kind of adjacent to crypto trading. It was like crypto trading is the core business, That's what people are here for. Let's experiment, with some payment products, on the side. So I think that was the first era. Then seeing, now there's a new class of companies that are really focused just on crypto and stablecoin payments. That don't care about crypto trading. They're not doing anything with crypto trading. They're just focused on creating these payment products. And so I think we're seeing that now. Then there are existing fintechs and payment companies across the world. And so whether that's Stripe or PayPal or WorldPay, that are increasingly starting to go from researching and experimenting to launching real live products that are crypto payment products or stablecoin based payments. And I think we'll see more and more of that, and particularly large global fintech and payment companies. They're starting to really recognize and see the benefits. See the innovation that's happened on the technology side. Get more comfortable with stablecoins, and looking to integrate them into their products. I think that's a really big deal because it enables many customers and types of clients and businesses who wouldn't have gone out on their own and partnered with a crypto startup, but they would consume a feature if it's embedded in an existing payment partner that they work with today. And then I think there's also this trend around big questions around how the regulatory environment will evolve. And I think we're seeing really positive progress, particularly in markets like Europe, where you had MiCA, a regulatory framework with clear rules for a number of aspects of the space, but even specifically for stablecoin issuers, that is now live in Europe. And so I think since that has happened, we've actually seen banks that have said, now that you've got this regulatory clarity, can we issue a stablecoin? And so I know SocGen has announced EuroCV, and that's a euro-backed stablecoin that's live in Europe right now. And so I think we'll see more of that. And I think that there are any major institution that cares about the future of payments and fintech and financial services, they're following the blockchain ecosystem closely. I think some of the biggest questions are just kind of what are the rules, and they want to have regulatory clarity before they enter the space and offer products. But I think even on the investment and asset management side, what companies like BlackRock are doing, that's also super significant. That you have BlackRock issuing money market funds on chain on the public Ethereum blockchain, and so there's momentum happening in kind of multiple sides of traditional financial institutions looking at blockchains and the concept of tokenization and how traditional assets could be represented on chain. And then you have large payment companies and banks across the world that are actively researching, exploring, looking at ways that they could participate in stablecoins and crypto-based payments. And I think some of the big questions will just be how does the regulatory environment evolve? It really depends on the market. How do some of the early pilots and experiments that these companies do, and I think that it always takes you're surprised. I think that it'll happen slowly but steadily, but it's clear that these are technologies that are not going away, and that we'll see more and more activity from large financial institutions in the space.
Yeah, I really love that you mentioned that the big questions are being asked right now, right, in anticipation for the future. So with that being said, what are new technologies or developments in the crypto space that you're excited about?
Yeah, there are a bunch. And so I think from a technology perspective, I think it's awesome that now that you have faster, lower cost blockchains, that developers can build many different types of applications that just weren't really feasible before. If you think about things like even like blockchain gaming, you couldn't really build a game on a blockchain if every time someone wanted to transact with an in-app purchase or transact with an in-game asset, it was going to cost $5 just in a gas fee. And so I think that it opens up the opportunity to many categories of applications as the infrastructure has scaled. And then I think there's also, really exciting developments around things like account abstraction and the ability to avoid the need of an end consumer to have to understand and manage gas. And I think this is something when we talk to people, both internally and as well as clients in the traditional payments ecosystem, that just baffles them that we expect consumers who just want to send money, to have to go and purchase a crypto asset, to be able to fund the transaction costs to send the money. And so even as costs have gone down, even if it's only costs a cent or a few cents to make a transaction on chain, now you're telling me if you send me a stablecoin, if you send me USDC to my wallet, if I want to move that anywhere, if I want to send it someplace else, now I have to go and buy 15 cents worth of Ether to be able to send that. It's not a very intuitive experience. And I think, with a lot of the activity in crypto payments coming out of crypto trading, it kind of made sense that, you already had people who had a balance of Ether, they had a balance of Sol, they were, had a wallet that already had access to crypto assets. And so spending a crypto asset as the native gas fee to send a dollar on chain was just ordinary. But as you try and reach a new set of consumers, I think you have to have new technologies where you could abstract away some of those concepts that no one should need to know how a native asset works or have to go out and actively purchase it to be able to transact in a stablecoin. And so we've seen a bunch of different experiments and implementations and approaches to account abstraction and gas sponsorship and subsidization and things that we think are going to go a long way to make the consumer experience better. I'm also really excited about improvements in wallet interfaces. And I think traditionally wallets, particularly self-custodial wallets, they always started with seed words. That was the only option. You had to write down seed words and hope that you didn't lose them. And again, it was, if you onboard someone into the space, you introduce them and you say, okay, first thing I need you to do is get out a piece of paper and a pen. And they kind of look at you and they're like, this is like the most advanced technology out there. And so now seeing a lot of innovation around multi-party computation with MPC approaches, seeing biometrics and passkeys and different ways that you could onboard into self-custodial wallets and manage keys without having to worry about losing a piece of paper. And so I think the combination of those things together from a technology perspective, faster, cheaper blockchains, account abstraction, abstracting away gas fees, better experiences in interfaces for wallets, it just starts to make this really look a lot more like payment infrastructure, and you could build real payment products on top of versus just crypto trading products that have existed in the past.
You made me chuckle a little bit about, the seed phrase because, that was my first experience, right? And I had to write it all down on a piece of paper and I lost that piece of paper. So it really made me chuckle when you mentioned seed phrase. But how might these innovations change the way we use and think about money?
So I think it just provides more options to consumers of different products that they can use. And even more importantly to me, it lowers the barrier to entry for developers, to build brand new products on top of this infrastructure. And I think that's fundamentally one of the things that gets me the most excited about crypto and blockchains is that it's like the ultimate fintech platform. And when you think about fintech and historically what fintech has been very much concentrated in a handful of markets, sitting on top of a number of kind of fintech focused banks and kind of banking as a service platforms. And it's really been just different interfaces that have sat on top of some of the same infrastructure. And now I look at blockchains as like it's a new lower level financial technology platform that any developer across the world can build new products and experiences on top of. And those could be a whole different range of wallets that are either standalone products, wallets that are embedded into different software products, and it can be built from all over the world. And so I think that you'll see, some products that virtually look identical to some of the leading fintech products today. If you think about like a Cash App or Venmo, you could see a product that, and we're starting to see some of these today, that look and feel very similar, to a Venmo, but it's built on top of crypto rails, and it's built and operated in Argentina, or in Tanzania, or in Thailand. And so it's just this more of a global fintech ecosystem where you could have developers that are, creating, really interesting competitive products, for consumers, but are doing so all over the world and are doing so on top of a global fintech infrastructure. And then those products can serve consumers in many different markets. And I think that's one of the really unique things about, just the structure and the way that self-custodial wallets, operate today is, you could have, early stage, companies that, have a few dozen employees who have a wallet that's used by consumers in 100 countries. And that just never really existed before in fintech. It was, you would start just in the US or just in the UK or just in Europe. You'd have to have many, many millions of customers before you could, really then expand, to the next, major developed market. There wasn't really this long tail where you could be able to, launch a product that could then be used and be used by consumers who have full control over their own money. And so you're providing an interface for that consumer, but not necessarily having to hold the money on their behalf. And so being able to provide that flexibility and to reach people who they haven't had a lot of fintech products that, may have been built, for their market, and then to be able to provide more options for them to hold, the currencies and the assets, that they want. And I think we're seeing a lot of demand for dollars, particularly in emerging markets. And, there's kind of a new class of dollar-denominated wallets and financial products that are being built using stablecoins, on blockchain networks. And so I think we'll see, both a combination of products that look and feel like modern fintech, but are incredibly much more accessible than, many of the existing fintech products, have been because of the nature of how they've been built in the self-custodial manner, on blockchains. And then I think we'll see brand new products that we couldn't even imagine, today. And so whether that's, next generation, social media, whether that's gaming, whether that's, all different types of products that have a financial and payment component, but look very different than just a traditional payment app. But you just, when you have developers come into an ecosystem, it's very hard to predict and imagine what they build. But we're seeing that excitement, that energy, and that usually leads to really interesting new products.
Now, I wanted to pick up on something you said, which is about the consumer's experience, right? So how do you see the customer's journey changing with the adoption of crypto payments?
I guess I would say I don't think it should have to. Like, I think that's part of the benefit of being able to issue Visa credentials and, partnerships like what we have with Wirex of, when it comes to the payment, walking into a merchant or paying online, we think that consumers should be able to have, the same experience, that they've gotten used to. And in fact, there should be more consumers across the world who, may have not had, great access, to cards and modern payment products that should be able to get access to them, when their a Visa credential is connected, to a wallet. And I think what we've seen is it is, really, really hard, to change consumer behavior, particularly at the point of sale, to have, merchants, figure out how to accept the new payment method, how are they have to train, their staff and, putting up a QR code in places where people, would rather just tap. So I think that the benefit and the role that we hope to play and that, we're excited to partner with many companies in the space to do is, when it comes to that end purchase at a merchant, you should be able to have the same great experience that you have today, but be able to link that to wallets that enable many different experiences that you can't get today with some existing payment financial products that are already there, and whether that's being able to get access to a loan at a competitive rate on a DeFi protocol, whether that's you got an airdrop within a game based upon scoring on a certain making a certain score on a level, whether that's a new kind of messaging app that has a stablecoin payment feature embedded within it. I think that there'll be many different consumer experiences and journeys that could change and evolve and be better and more interesting in terms of onboarding into a wallet, interacting with that wallet and the type of products and services that you can get from it. But when it comes to getting back out and connecting back to the real world and going and buying a coffee down the street, or going to your dry cleaners, going to the 100+ million merchants and sellers that Visa has on our network today, that shouldn't change. And I think, in fact, if it does, if it has to change, it's going to be really hard because it takes a lot of time, both for the consumer behavior and the merchant behavior. And so I think that's why, like, a big opportunity is to combine both of these worlds and keep the experience on the end payment, the off ramp, the tap to pay at the point of sale, to be as consistent as what exists today.
I love the fact that you mentioned that the customer's journey doesn't really have to change, right? And I think, in order for adoption to happen, we have to enhance their experience. And also, I suppose, to bring convenience in how they, manage the money, right? What trends do you think will shape the future of crypto payments?
So from a convenience perspective specifically, I think having these more modern interfaces that particularly can abstract away the need to have gas fees, the need to understand how to sign a transaction and broadcast it on chain, and being able to have a product that just looks and feels like a payment app without having to know about a blockchain. I think that's one of the most important major elements. And then I think just having greater fiat connectivity on the on and off ramp side. And I can imagine a future where you could have every wallet address is paired with bank account details, and you could have someone send you funds to a bank account that automatically lands in your wallet address, or you could send funds to someone's wallet address that automatically lands in their bank account. And so I think we'll see more and more that wallets, blockchain wallets could become this new type of a payment credential that could have significant utility when it's connected to the fiat ecosystem, and when it removes the complexity that inherently exists with a consumer directly using a blockchain, and whether that complexity is having to purchase a crypto asset to pay a gas fee, whether that's having to put in a long hexadecimal address. I think that's another component of it still makes me nervous today when I send an on-chain transaction. I'm looking at a long address, I'm checking in a few times, you send a test transaction, like moving towards being able to have human readable aliases. We've seen this with ENS and a number of different approaches of it's a lot more consumer friendly to make a P2P payment to someone's name or someone's phone number than having to copy and paste and put an address in. And so I think we're seeing these improvements and these developments happen, and they're getting better, but there's still a ways to go before the ease of issuing, creating, and managing a payment credential that is a wallet address on a blockchain is the same as managing a payment credential on an existing network. I think there's still challenges around interoperability across different blockchains. What if I have a stablecoin on Solana, and what if you're on a layer 2 on Polygon ZK? It's how do we interact with each other, and how do you enable a consumer to not have to think about which chain or which stablecoin brand they want to send or receive? And there's still a lot more work to do there to make that much easier than bridging across different blockchains today.
Yeah, I love that. And just as a final question, and to close off the podcast today, how can companies keep up in a financial world that's constantly changing?
Yeah, so I think first, from the perspective of big companies and traditional enterprises that are in the payments ecosystem right now, I think that the thing that I recommend and that's been really important to me from the beginning when we set up the team is you have to actually use the technology. And even starting just personally, a core element of the culture that we try and really instill is having people working on the crypto team at Visa who are active crypto users. They are experimenting with wallets. They're using these products. They're sending and receiving stablecoins. And you kind of have to use the products to really understand where it is and where it could be going. And so I think there's a tendency inside some large companies, first to just you could read and study and research, but until you've actually tried to do something with the technology, it's just very hard to really understand it. And so we've taken the approach of, we should use crypto, we should use blockchains to understand, how they work. And, doing that personally in terms of, I love just downloading and testing out different wallets, different experiences, different ways, to on-ramp, which ones, work better than others, what are things that could be improved, and getting in a habit of actually using the end products that we're trying to enable. And so I think that's one piece. And then trying to push the organization in a way that is, low risk with the right controls in place to start to use the technology, to learn as well. And that's what, some of the pilots that we've done, like USDC settlement, has really opened up for us of, for the first time, Visa is actually moving money on chain in stablecoins, that we are sending and receiving blockchain transactions out of Visa Treasury. Now it's at a really small scale. It's early. There are a bunch of controls, in place, but just the difference between, our treasury, has never, interacted with a blockchain or a blockchain, based payment platform and never received the stablecoin. So now we have, it really goes a long way. And so I think about it almost back to the analogy of, when the internet emerged. I think that, there's at some point in time, every company had to decide, okay, when are we going to get a corporate internet connection? And when are we going to give our employees email? When are we going to set up a website? And I would bet that the companies that were earlier to setting up, corporate internet connections and trying to figure out how to bring their companies online, and ultimately ended up, having much more success, in that transition. And so today it's like, how do you get a corporate, on-chain connection? What can you do with a blockchain? How do you start experimenting and being able to use the technology? And the earlier that you start doing that, the better position that you'll be to be able to navigate that change. And I think one of the things that's so amazing about Visa is, we really, we had a fantastic, product and network, pre-internet, being able to power commerce, across the world. And then, we were able to accelerate, with the internet and create, brand new, fantastic products that help to, usher in this wave of e-commerce. And so being able to navigate these huge transitions really requires leaning into the technology, creating a culture of people who are passionate about it, who use it, and then really pushing the organization to find ways to use it ourselves. And I think there's that same opportunity where, blockchain technology, stablecoins, crypto rails could ultimately, help Visa, expand, access to digital payments and accelerate our business even more across many different payment flows in many different markets. And so we're really excited, to do everything we can to help become a bridge and partnering with leading companies in the space, like Wirex, to really move the ecosystem.
I love that. Thank you so much for this insightful conversation. Really, thanks for joining us today. And it was really great having you here, Cuy.
Thanks for having me. It was a pleasure.
And to all our fantastic listeners, I hope you've enjoyed this conversation. Don't forget to express your support by liking, subscribing, and sharing this episode. Thank you for tuning in. And until we meet again, stay well.